Good evening, everyone, and welcome all of you to Mongo Spaces this Tuesday evening. Today we have Arvocap Asset Managers. We have the CEO and the CIO here today. They're going to share with us the secrets of asset management and how they've built what has come to be a renowned asset management shop. And of course, we discuss global markets. If you want to discuss a bit of the tariff situation in the US and how it's affecting investments, we're here for all that today. I'll start by letting them introduce themselves. I'll start with the CEO, Monica.
Thank you. Thank you so much. And good evening, everyone. Pleasure to be here and my first time in this space, and I hope to enjoy this time. So my name is Monica Moneki. I'm the current CEO and co-founder of Arvocap Asset Managers. A little bit about myself. I've been in investment banking space for the last 16 years, working with the top investment banks in the country, including Standard Investment Bank and Dye & Blair. I am passionate about investments, heading the fixed income team at Dye & Blair Investment Bank for a period of over 7 years. And I love engaging with investors, showing them how to create wealth and not just create it, but preserve it. I hope that captures enough about me. Thank you.
Yes, it does. But before I switch to Wilson, I'd want you to be able to share a little bit about yourself because women in finance are a bit of a rare breed. It has been in the past. It's improving now. So you can share a little bit about that perspective of your journey. How has it been?
It's a space with few women. I remember when I started my career, I was among the few fixed income dealers. Currently, still not so many. I still mentor the ones that are available. And what I will say is just to encourage women to venture these spaces with courage, because really not that they are not fit to be in the space, but I think maybe they just look down on themselves. Again, the space will not call you or give you a fair play. So you have to fight for it. And it's not easy, but once there, it's worth it.
And what inspired you to start on the journey of finance?
I would say since the time I was a little kid, I was passionate about numbers. I was very good in mathematics. I loved playing around and solving puzzles. And I think this transitioned all the way to campus. And even in my career, I started my career at the stock exchange, capital markets. And maybe that has also given me an edge. I've just been passionate about numbers.
Then this is definitely the space for you. And one more question before I switch to Wilson. Being a co-founder, how is that? How do you become a co-founder?
Wow, that's a big one. You've got to have a clear vision of what you are trying to achieve. And then that vision has to be driven by passion that is so big that it even scares you. Sometimes you just need to know the bigger picture and to see the first step. In between, you'll figure it out. So once you take the first step, then that passion drives you to the next step and to the next step. It's an interesting journey. I'm really enjoying creating and co-creating new products, seeing transformation into investors' portfolios, and just impacting lives.
But the switch is usually from a regular salary to actually being hungry on the road. How is that usually? Is there a jump there? Because there's a regular salary here and then there's an irregular salary following after it, or no salary for a long time.
The salary bit, we have to know that salary is like a mattress. It cushions you. It gives you comfort. And where you want to go, where your vision is, has to pass through some discomfort. So you have to be ready for that discomfort. Of course, don't jump just blindly because you have a vision or you have desire. Make plans, be strategic, and don't jump in a haste. But once you jump, keep going and it will add up. We'll talk more about this journey. And I know I'll be able to shed more details on this.
I'll come back to you. Sundal, over to you. Introduce yourself a little bit and let's dive in.
Hi, good evening, everyone. Happy to be back at Mongo Space. My name is Wilson Wariari, Chief Investment Officer and co-founder of Arvocap Asset Managers. My journey, I've been in the industry for the last 11 plus years, almost 12 years now. Started in international markets. I was a derivatives trader, traded a lot in the Chicago Mercantile Exchange and the London Mercantile Exchange, and a bit in the NYMEX. My first 4 years was in derivatives, then transitioned to wealth management. I was a private wealth manager before Arvocap was a private wealth manager in local investment banks, helping clients invest both in local and offshore markets. So that's a brief background about myself.
A quick one for you, Wilson. What does the Chief Investment Officer do day to day?
High level strategy, investment strategy. That means at Arvocap, we have different products. And these products have different teams, different research analysts are looking at different markets. And so providing one in terms of each product, providing the overall strategy. But then on the other side, it's sitting down with the investment councils. We call them investment councils at Arvocap that deal with certain products. And based on now the trade ideas, the recommendations, and now doing the final action. So basically, that's in a nutshell from strategy to heading out I would say the research and the deliberation councils in terms of, which trades to buy or the take profits, the whys of investing in certain particular stock or a certain board, basically having that initial high level strategy. But then in terms of it, going deeper now into the action bit of it, in terms of now the execution of these trades, of course, with the help of the traders for the particular product. But at the end of it all, as a CIO, you are the final position and the final weight lies on you in terms of the actions that have been taken.
And perhaps you can tell us a bit what inspired you on the journey to finance, just as I asked the CEO.
My journey to finance began with the 2008 financial crisis. I think that's when initially just reading the newspapers about, and we don't understand what all this is or what it's all about. But then at that point, there was a lot of talk about the economy, about the global economy and all that. And that, for me, attracted me to just learn and study more about international markets. So that drove me to, when I was choosing courses, so to do economics, I felt that may give me a bit of exposure onto the international markets. But I think once I joined campus, my interest grew. So probably found that the course was not covering everything that I wanted. So I had a bit of a deliberate action to try and just research more about international markets and all that. And so I think the passion grew through that period. We are reading all these books from the former Fed chair and all that. And I think that interest just basically grew. And then the big opportunity came in my fourth year as I was about to graduate. So an international company that was looking to recruit in campus applied, did the aptitude test. I was fortunate enough to pass the aptitude test and get the job. So that one basically what drew me now directly to the world of international markets and international finance. And I think from there now the love about markets and data and speaking the numbers, the ticker and all that grew deeper. And it's been a journey, it's been an exciting journey. And at this point, it's now looking at what the international market has in terms of product offering and what the local market has, and looking at the gap that there is, the drive to innovation and creating products that will help or enable our investors basically to manage their risk better, to take advantage of the great opportunities and the returns that markets offer. So I think now that one has been growing over time based on that.
Thank you for that. It's awesome. Now back to the CEO, Monica. I wanted to understand a bit about the formation and the journey that Arvocap has been on. So maybe you can give us a bit of flavor on the key highlights on the formation, how you jumped ship from paid employment to starting off Arvocap as a co-founder, and how the journey has been so far. So what inspired the creation and how do you see Arvocap standing out? And by the way, what's the meaning of the word Arvocap?
Thank you. It's an interesting journey. As I said, some of these passions burn in you and they take some revelation for you to actually package what it is you're feeling you want. So in the course of work, I and Wilson and the other co-founder, Priyanka, used to work together and used to work closely, working with clients. They will be in the private wealth desk, working with clients on how to grow their portfolios. And I would really support them on my side on bonds. And I remember giving them even tutorials on how we can help clients build bond portfolios, selling them and all that. And I remember we used to keep telling clients that bonds are risk-free. But then there came rates now were shifting and clients are trying to exit their bond positions and we are giving them prices that are giving them a discounted pricing because rates have turned. We have been telling clients that bonds are risk-free. So now what do we tell them? We started another education on what happens when rates go up. And when rates go up, prices go down. And rates going down, prices go up. So it was another whole discussion and just understanding the needs of these clients. So they were trying to shift. What next? We have invested in stocks. We have invested in bonds. What next? How can you still help us level up on this journey of wealth creation? And so in the process of constant consulting and just ideating, we thought that there is a way we can give these clients good products. We can actually create products that fit the needs of these clients. A good example is finding clients who are buying bonds and laddering them so that they can be able to get coupons, maybe on a monthly basis. But then there were a number of challenges. For example, some months you would have very high coupons. Some months, actually, there were no bonds that had coupons. And so you had to tell the client, when this coupon pays on this month, you have to be able to balance it out to take you through 2 months. And so what if we created a product that secures this client's mind, that they know with certainty, I will be getting payment coming every month, every quarter, or every semi-annual or annual. So we created such a product, and I know we'll delve deep in our products. When it comes to bonds, they kept asking, how comes you say you can buy and sell bonds anytime in the market, yet when I bring for you my 5 million, my 2 million to sell, you give me a very bad pricing? But it's because the market favors the big players, the banks, the insurance companies, and even the fund managers. So that's a game we were trying to bring to the clients. We kept feeling there is a space to create products, to offer solutions to our clients. And that's when we now started wondering, how do we package this product? Do we come out as promoters? What is it? And in the process of ideating, we thought of a fund manager. But at first we thought this is such a high business formation that requires so much. But nevertheless, we dared and we sought from CMA what are the requirements to register a fund management firm. And we got the requirements. After all, they're also on the website, just seeking clarity on what some of those requirements would entail. And you'll be surprised that these regulators are really open to listen and to help what you're trying to bring. So I remember as we walked the journey and we ticked all the boxes when you're checking through the checklist, and we were clear that this is the route we will take. At that time, now we started asking ourselves, what name do we give our company? And we thought of many names and many meanings. And one thing stood out is that we were just trying to create value for our investors. And not just create value, but preserve that value that we will create for the clients. So in the deep searches, I remember Wilson with Priyanka came up with Arvo, because we were guided by Priyanka's pet shop, which has a Finnish word. And so we went to Google and checked what is the Finnish word of value. And that's where we got Arvo. So Arvo means value. Cap is short form for capital. So what we are just trying to do is to create value for our investors' capital. So that's how we came to form Arvocap. And even as we were going through the full regulation, it was a very rigorous process. And the documentation you require is immense. And they do a whole proper fit. It's called fit and proper test, just to ensure that everyone who is going to be a key personnel in this company you're saying you're bringing for registration, fit to manage people's wealth or money. And so they will check with your former employer. They will need you to get a recommendation from a person working in one of the licensees of the capital markets and stuff like that. So it's a brand and a business we own with pride, and we are proud of this certification or this license, and we are yet to even bring it to the fullness of life. There's a lot of products that we have, and slowly by slowly, we are creating awareness to investors and giving them options and diversification solutions to their portfolios.
I think naming is one of the biggest challenges at the beginning of a business. So it's very beautiful to see how it worked out in the end. And so I understand, because Mwango Capital, so we had to really think about it a lot, because you want something that reflects a name, and most common names are taken already, but you want something unique at the same time. So it's interesting that you had to go all the way to Finnish language to get something that actually works for you. But it's a really good name, I would say. Wilson, back to you now. In terms of products, I have the CIO notes that you had written, which is titled Change is Constant. I would want us to maybe go through it a bit, but perhaps start with the funds. So Arvocap, then below it, how many funds do you have, and what are the various products under these funds? Where are they invested in?
As the CEO has said, as we were interacting with the clients, there was always this question of what next, trying to understand in terms of as they grow their wealth, how do they diversify? How do they manage their risks better? How do they capture the market opportunities that the global markets are offering? And out of all that, as we sat down to think about the products that we bring to the market, we came about with 10 products. And each of these products was created with an investor in mind, as the CEO was trying to explain. And as I'll explain about some of these products, that there was a certain investor and a certain investor need that we were trying to cure with this product. The 10 products are divided into 4 categories. We have the money market fund. It's the most common fund amongst investors or amongst most fund managers in the country. But we feel that the money market fund can't be the all-in-all in terms of investor needs. By design and by regulation, should be a short-term investment product, and even how it invests in very short-term asset classes, maximum of 18 months. So we feel that now where our investor goals are more than 18 months, then we need products that will match their goals. And so we came to the fixed income fund. In the fixed income category, we realized there are different types of investors. There are those investors that are looking for income, as the CEO was saying. Or those people who are looking, I invest this lump sum or this amount of money, and I'm looking to cover my rent. I pay rent 30,000, 40,000, 50,000, 100,000 per month. So I'm looking to cover my rent. So how much do I need to invest to get 50,000 per month? Or I'm paying school fees. I have 2 or 3 kids. I'm paying 100,000, 200,000 or 50,000 in school fees. I'm doing this type of work. I'll get this lump sum payment. Probably I've done a contract or I'm getting this bonus. I've accumulated my savings. So how much do I need to put aside to ensure that I'm getting this 100,000 per quarter to ensure that I've covered my school fees? So we created a fixed income distribution fund called GAO. So GAO distributes in 4 frequencies: monthly, quarterly, semi-annual, and annual. The monthly rate currently is 14.5. The quarterly is 14.9%. So these rates change every semi-annually. That's when you have a rebasement of the rates. So once we covered the client who are looking for income flows, then there are these clients who are like, I'm investing in the boats. I have my boats portfolio, or I want to be invested in the boats portfolio. I'm trying to save for this long-term goal, or I'm trying to buy an asset in the next 3-4 years. So how then do we, and you say now, if you are trying to buy a piece of land or you are trying to build, you want your capital a bit less risky. You are saving for the next 3, 4, 5 years. So you don't want to put a lot of risk on your capital, but you're looking how do you accelerate towards to achieve that goal. So we created an active boards trading fund called Almasi. It's been one of our best performing boards within our portfolio. Almasi actively buys and sells boards, both in the primary and the secondary market on the NSE. So we are active in that space. As the CEO said, we realize that the space favors those with quantum, with the large amounts. On average, we are trading almost over 10 billion worth of boards every day on the Nairobi Securities Exchange. But if a client was trying to sell their 2 million, they didn't get someone to match, but 10 billion worth of boards traded on the NSE. How do we help our clients achieve this? 1. 2, create liquidity. As rates were changing, and clients were like, oh, if I try to sell, I'm marking my boards down, so I'm selling at a loss, or I can't get someone to match. So how do we create liquidity? This collective investment space, then you can create that liquidity whereby now once you buy into the fund, you're just a unit holder, and when you want to sell, you're just selling your units. Within 48 to 72 hours, you have your money back. So create a liquidity pool within the board market for the retail and the corporate investors. And so that was something else. So the Almasi fund actively trading has delivered 22.7% for the last 10 months. And this fund, we believe, and even based on the strategy, will actively deliver above 20-22% year over year for the next 3, 4, 5 years on this particular fund. Save, low risk, but helping you to accelerate towards your goals. So that was the Almasi fund. Then the other one in the fixed income space was the Eurobonds. We help clients buy Eurobonds. If you have dollars, a minimum investment in a Eurobond is $200,000. So not many clients have the $200,000 to put aside. So we created a product whereby with just $1,000, you can get a piece of a Eurobond. If you have dollars and you want to maintain your investments just in dollars. So it's called the Euro Fix Fund. Invest in a basket of Eurobonds. So we also realized the volatility on our Kenyan Eurobonds. So we created a basket of other African Eurobonds and a few yielding corporate bonds just to reduce the volatility and also give optimal return on that. Currently delivering 8.12% on annual yield on the dollar. So that was a fixed fund. So that was a fixed income category or a boards funds category. Then we realized now, apart from boards, we have the share market, the Nairobi Securities Exchange. The clients are still interested to buy your Safaricom, your KCB, your Equity, your Stanchart, your dividend stocks, your growth stocks, and such. However, people buy, at times they get caught in the market moves. And so at the end of the year, client will say that I invested in shares the last 5 years, they have not done anything. But during that period, we find that now the volatility buds within the market probably have counter moved 10, 30%, came down. At the end of the year, if the client didn't trade, all they got was their dividends. So how do we help clients professionally and actively manage the equities portfolio? So we created an active equities fund. It's called the Money. It's the only hedged fund. So we use the derivatives on the Nairobi Securities Exchange to hedge our exposures. So basically means whether the shares are rising or falling, we are always in the market looking for these opportunities. So it's called the Money Fund, delivered 22% the last 10 months. And above the money or the local markets, we realize there's a bit of a structural, I would say the market is thin. if I may use that word, only about 7-8 counters you can actively trade in. If I'm looking to buy 1 million shares today or to exit 1 million shares tomorrow, only a few counters can absorb that liquidity. So how do we help within the same equity space, help clients invest around that? So we went to the African market because we realized that a lot of the counters we trade here are names or brands that are trading out of the markets in big quantums or in big volumes. Your APSA, your Stanbic, you have your Standard Group in South Africa. Even in terms of strategy, if we went to only telco and say that you are only allocating 8 or 10% in telco, here you only have Safaricom. So we are tied in terms of our strategy. In the African market, we have a lot of telcos that we can invest in, from Safaricom, MTN Uganda, MTN Group of South Africa, MTN Nigeria, Sonatel, and such. So there was a bigger space for us to operate. And these are still names well known to us, or even brands bigger than some of our brands even here locally. We went for African Equities Fund, been one of our best performing funds, mostly because of the strategy and also because of the sector diversification. The mining sector or the mining segment has done very well for us. The gold miners in South Africa and such, really, the gold prices going up have really performed quite well. So that fund has been one of our best performing funds within that space. And we're looking at it even in terms of diversification, that in as much as we know past performance is not indicative of future performance, but based on the strategy, we believe we'll continue performing quite well and probably performing the market that we are trading in. But then beyond that, now there were clients who are looking to get into the global markets. Your Apple, your Alphabet, your Unilever, your Alibaba, they're trying to get into these global markets. So you have a global equities fund. It's a high value fund, helps clients invest in the global markets, dollar denominated. It also helps in currency diversification. Then we have a global Sharia equity fund. So one, we realized that there's also deficiency in terms of products in the ethical and Islamic finance space. So we created a global equities fund that invests in global markets, but in Sharia compliant products. So that was our third group, the equities funds. But then beyond the equities fund, the other question we kept on getting from clients was, how do I buy gold? How do I buy silver? How do I buy crude oil? How do I invest in AI, Tesla? How do I invest in Nvidia? How do I invest in all this and this? And so for us, we studied the market and we realized that every now and then, there are certain themes that move the market. Either it's geopolitics or certain specific themes that pull investors and global investor capital. And so we looked to create a product that will help merge clients' investment appetite to the global themes that are pulling a lot of investors' capital. And so we created a multi-asset strategy fund. I would say it's quite unique in as much as it has peers in the market. But I think in terms of strategy, ours being a thematic fund, that what we do, we first study theme, identify AI or identify energy as a theme. And then from there, we try to allocate either through shares, CFDs, where you are quite confident about a certain sector or theme, through ETFs, or through commodities. Multi-asset strategy fund has done quite well, 16.6% for the last 10 months. And the beauty about this fund is, even during this global turmoil, the last 2-3 weeks when the markets have been very volatile, I think the biggest drawdown we had was just about 1.9% because of how diversified it is in terms of sectors, in terms of like our EGM beam really did quite well during this period. And also we managed to actively trade within that theme itself. That is the gold, silver miners component, palladium, platinum component. So the multi-asset strategy fund basically helps us to go deeper in terms of global thematic issues and try to allocate capital within those. And what we know is that these themes come and fade. So always trying to be on top of the themes that are driving capital markets. So it's a dollar-denominated fund, good for clients who are looking to basically get into that marketplace. And then we have a Mabruk Sharia fund. It's also a multi-asset strategy fund. It's Kenya shillings denominated, but also now invests across different asset classes. So basically that's our product offering. And as you can see, each product is geared towards a certain investor in mind. If you are looking for short-term savings investment product, you have our money market fund. And what you have done is you have gone further. We have a mobile app, but in that app, we have created wallets. So basically, you try to match your goal. You are saving towards holiday, you're saving towards school fees, you're saving towards buying a phone, and create a wallet. And that wallet, you're saving your money market fund. It's basically goal-oriented investing. But where your goals are a bit long-term, you have your board fund, the Almasi, that helps you work towards your long-term goals, whether building wealth or acquiring an asset in a long-term view. Or where you want to get into the equities market and you can't manage to look at where the share prices are every day, we have our equity funds to help you, professional manage to help you navigate that. And where you want to get into now the commodity space or basically mirror the global themes that are driving capital markets, then our multi-asset strategy helps you in that. So that's basically our product offering. And as I said, it was investor oriented. What were the demands or what were the needs that our investors were having? And then we try to create products to help them fit and help them guide to creating portfolios that can suit their investment requirements.
That should be one of the most detailed assessments of products that I've received in a long while. But a quick one, Wilson, since you've detailed all these funds, when someone comes to you and just an average investor who has no knowledge about all this, how do you know which fund is best for them?
What we do is first do an assessment, either sit down with the client just to understand, or at times it's just via calls. So we have our wealth managers and also our customer service representatives. We basically guide the client in terms of first just to try and understand what is their need. There are those clients who basically come, probably they know they are just going to the money market or they are going to Almasi and such. But also there are a lot of clients who we sit down with them or have those phone calls or Zoom calls with them to just first understand their needs. What are they aiming to achieve? What is the investment goal? Then assess their level of risk. Because at times, an investor will see which is your best performing fund and they are just trying to get all in it. And so now just trying to guide them that in terms of risk, that understanding the risk level of each of the funds, and also in terms of diversification, we really help clients build portfolios. That even as you're starting your investment journey with us, probably build a good base, probably through a fixed income portfolio. That helps you, becomes your core anchor as you start your investment journey. Your Almasi fund or your money market fund, something that won't give you sleepless nights, something that's not highly correlated with what a lot of these global markets are doing. Then as you build these base, then we now help you now move to the next stage, whereby you can accept a bit of volatility in your portfolio to probably get into an equity fund, into a global fund, into a multi-asset strategy fund, an African equities fund. And so with that, now we're helping you build a portfolio that will help you work towards your goal. And having come from that wealth management side, I think we are very keen to help clients build portfolios, understand their needs, but then walk with them through the journey of their needs. And for the clients like we started with 10 months ago, you're just sitting down with them to reassess their goals. That this is what you are looking to achieve. Is this what your goals still as you head to the next year? Or where do we reallocate next? Where do we build next and such?
Monica, I think you're more the expert on bonds. When someone comes to you in terms of wanting a bond portfolio, what are some of the questions you would want them maybe to ask themselves, or perhaps in terms of risk and exposure and all that?
Usually what will happen is the bond investors across different perspectives, some of them are just parking money in bonds to hold to maturity. Others is because they don't know that there are opportunities of trading these bonds and even getting better returns from these bonds. So most of the time we find ourselves educating these clients and we realize that they didn't know that some of these things are possible. Again, what we also do is to help them optimize their bond portfolios. So a bond portfolio, a personal bond portfolio, it means you have opened an account with CBK through the DAO portal. And so you have your bonds in that portal. So there are a number of ways that we can assist you. One, reinvesting your coupons, because most clients do not reinvest their coupons. In fact, they eat coupon in quotes or literally. And what happens after a whole 7 years or 10 years of holding a bond? You bought a bond worth 1 million. You just get back your 1 million. So of course that money has depreciated because of inflation and time value of money, because you cannot show where the coupons went. So if you are disciplined or guided to reinvest your coupons on the same asset class backed products, say our Almasi, then at the end of this period when your bond is maturing, you'll not only have the principal amount that you invested in your bond, but also you will have another seed, a seed that grew from the fruit of the tree that you planted first, now in the bond fund. Again, you could trade the bonds, you could offload the bonds and reinvest that money in the bond fund. So those are among the different perspectives that we work around with the client, or just leaving that portfolio packed there. Do not get into buying new bonds right now. After all, infrastructure bonds have really reduced in offering, but you can be able to invest in a bond fund, which invests in the same asset class that you're comfortable investing in.
And then in terms of rates, they've been going down a bit. I think sometime early last year, we were at 18%, and now we're around 10% in terms of the T-bills and T-bonds. One of the common questions you get from investors, what is happening?
You see, when rates start going down, interest rates going down affect across markets and across different asset classes. For example, Rates going down it comes all the way from CBK cutting rates. This happens across different central banks. So it's not only in Kenya. So when central bank cuts rates, it means they are going to cut even the rates they will issue in the bonds that they are going to continue issuing. In the secondary market, rates will go down. When rates go down, to an investor, you're not able to get into the bond market at sharp rates like people who got in at those high rates of 18. But this is a positive in a bond fund, especially in our Almasi bond fund. This is because when rates go down, prices go up. So you will find your valuation of your investment in Almasi going up when rates are going down. You will ask, what happens then when rates are going up? Does it mean that I'm losing? When the rates start going up, it's time we bulk up and start buying those higher rates to average up the holdings of the fund. And that's why we are saying this is a long-term play. It actually is a secure long-term play because either way the markets are moving, the capital is being protected and it's being enhanced by measures like reinvestment of coupons, because now you'll not be earning your coupons, but they'll be reinvested. We will be doing valuations of the bonds, and at the same time, we are getting capital gains by trading the bonds.
Wilson, in terms of global markets, tariffs have been the major talking point in Q1 and going into Q2 now. AI has also been a key theme. So what are some of the key themes that you've been watching in global markets? Some perspective on that and how you're positioned at least going into Q2 also.
Trump tariffs and the new sheriff in town. I think looking even at Trump's campaign trail, studied because most of these things we started studying them during his campaign trail and when it was quite evident that he is going to win. So looking at what are the Trump trails and what are the impacts. And so at that point, what we did was try to identify some of the themes or some of the areas that could be affected. Of course, he was very vocal about tariffs. So we knew at a point there would be this tariff war, something he had started in his first term. And so there was all those indications and even into who will be impacted by what. And for us, what we have been doing and trying to position our portfolio since Trump came was first looking at who will be the beneficiaries of some of his policies within the marketplace. He was very vocal in his first term about Europe and NATO and how they need to reinvest in their militaries and all that. So on one side, it was quite evident that the military industrial complex, especially in Europe, so we started getting exposure into Rheinmetall and such companies earlier enough. But then on the other side, during that period, the Chinese have been trying to, I would say, a slow boost of the economy. But the market was always a bit cagey. Why are they not going all in terms of stimulating the economy? But I think also the expectation that tariffs will come and impact, they didn't want to go all in. But there was an indication that we'll do anything to support our economy, and even when this comes. We took advantage a bit of that. I was a bit exposed within the Chinese market in Q1, paid out quite well for us. The Europe market paid out quite well for us. When you look at this Ukraine-Russia crisis, I know there was that Trump had said that he's committed to end the war. So you're looking at who will benefit a lot, the European industrial complex, which has really been decimated in the last 2 years because of high energy prices. So we started, and within that space, we'll be benefiting a lot, the European chemicals companies. So we got a bit of exposure within that. And so those became our biggest or some of our biggest riders in Q1 in terms of returns because the market performed quite well outperforming those sectors. But when you come to this other angle, the AI theme, whether from a US perspective or even from a global perspective, I think we are still in the early stage of AI, especially in terms of infrastructure development. When you look at the shelf life of these data centers, 4 to 5 years. And if you look at the investments that had been done since 2019, when there was escalation of investments in infrastructure in data centers, Amazon started investing heavily in 2019-20. So it means that by this year, most with a depreciation cycle of 5 to 6 years, they need to renew most of the chips within their data centers and all that. So I think the buildup of AI and what has happened is that as they are doing the buildup or changing from their core systems initially to the new ones, they're getting better chips, better utilities, but the demand is also high because there's also a bit of more enlightenment about AI and all that, and more players in that space. So I think for us, AI infrastructure as a theme is still a great play for us. And we see this extending probably for the next 1 or 2 years. And I think even as we look at this build-up on AI, and more importantly, people changing from their core systems or the systems they used before to the new ones and all that, and this life cycle of 5 to 6, 7 years in these data sectors, so it means that infrastructure build-up in AI becomes quite key. So we have been trying to take advantage in Q2, lightly exposed in Q1, But as we look at Q2, we are looking at now how price points and these markets being rattled. We went into Q2 a bit heavy on cash, booked a bit of our profits, our quite heavy on cash. So we have been deploying during this system or this period where the markets have really fallen. And we are looking just basically to deploy among some of the themes that we had identified. And we have been looking futuristic, how we expect them to be good place. So basically that's how we are positioning ourselves in terms of looking at some of the sectors and some of the plays that we expect that capital flows. As you said, we study a lot global capital flows, infrastructure capital flows. Where is capital going? Where is the market being driven towards? And so based on that, we try to position ourselves early within this place. So basically in terms of Trump tariff, they are here. There's a bit of crawlback. And I think we see these literally being there for the next few weeks. I don't think it will be a quick add as most people expect. I think there'll be a bit of, we give you this, retain this and all that. But I think during this period, it's a good time to invest. If you have been looking to get an exposure in the global markets, this is a good time to invest. This is a good time to get into a fund that will give you that exposure into these markets. I think there's a bit of time for investors to build up on that, even as we see more negotiations. 90 days extension of the tariffs means it's just 90 days of investors to position themselves. As I said, it's not something that will just add abruptly. It's just before negotiations, before agreements and all that. But as more agreements are signed on, then you see the market start recovery space. Position yourself well. If you are not in the market before, I think this is a good time to start positioning yourself.
And for those who are always worried, there's always something to worry about in the market. For someone who's worried about tariffs and all these kind of things, why is it a good time to invest right now and not tomorrow?
As I've said, it's about looking at some of the businesses that you're buying into. As I've spoken about AI, NVIDIA, the demand of the chips, that whole semiconductor complex. The reality is there's huge investment into data centers, that whole cloud computing space. And then now in terms of now when you come now to the inferencing and the AI tools that are being created, so you see now it's a two-play. So there's the AI tools or the utilization of the AI as a thing, but then there's also this aspect of data storage and better the name. That's been the biggest driver actually. Data centers have been actually the biggest driver of the growth of this whole theme, the semiconductor theme. Let me call it the semiconductor theme for the last 2 years. And studying to the businesses that have invested into it, Amazon and their AWS business line, $140 billion annual revenue business now. This is a business that has gotten that market lead within this cloud computing space. They started investing a lot in 2019. Looking at the life cycle and the depreciation cycle of their tools means that now they need to rebuild. And they have stated, so now it's time for them to rebuild even some of their data centers. As they expand capacity, means there's also even renewing what they already have into the new technologies and such. And so means that now investing in high cash flow rich businesses that have higher margins. So it means that even whatever happens for the next 2 to 3 months, because this tariff war, I've guided that I don't expect it to come to an end in the next 1 week or 2 weeks. And whoever is telling you that within 2 weeks we come to an end of these, I'll say probably they are really exaggerating this. You may see it. We've already been given like a guidance, 90 days. So this is something that we'd extend back and forth for quite a bit of time. But now looking beyond that these businesses, we know we continue investing in themselves. There's huge cash flows, huge margins that are being generated into these beautiful cash flows. So means it's businesses that you can buy now, sell through the little volatility you see now. And I think most of the premium that was there has already been taken out. Some of these counters are 20, 30% down from where they were. But most of the premium that was there has already been taken out. And so what you'll have here is basically a little volatility bandwidth. And so if you can see through beyond that 2-3 months of little volatility, then means that you're picking some of these counters at very nice prices, at very nice multiples. When you look in terms of price to earnings or enterprise value to EBITDA, you're picking them at very nice prices that you could not probably have picked them like 6, 7, 8, 9 months ago. So positioning your portfolio for the long term, beyond this short-term volatility of the next 3 months, I think this is the best time to build up within your portfolio. And as the market recovers, by the time all these deals are coming to play, then you are within that plane. So I think that's why when you look as an investor, always try to position your portfolio beyond the next day, beyond what the market does in the next 2 weeks. And as you have seen, anytime there has been semblance of positive news, the market is up 10, 15%. So what does that tell you? There's a lot of money, a lot of capital sitting in the sidelines. If you look at some of the markets in Europe, in UK, or even in US, money market funds have grown from 2 trillion in 2023 to over 6 trillion now, 6, 7 trillion. So that tells you that's a lot of capital that has been in the sidelines that's looking to be deployed when opportunities are there. And so when some of these things start aligning, you see a lot of this capital being deployed back into the markets, getting to the bit of the risk and taking a bit of the beta. So for you as an investor, the wipeout, the shakeout has happened for the last 2 weeks. And so just trying to look at how do you position. And that's what we do ourselves, that even as we are deploying, progressively deploying capital, progressively studying the businesses that we invested in, and investing in businesses that can basically outlive whichever volatility will be here. Their margins would be affected or will maintain the good margins they do. Some of these businesses have gross margins of 70% plus. We really try to look at businesses with margins of 40% plus. It means that these are businesses that have leg room, that even if things are to be squeezed a little bit, if the margin is moving from 45 to probably 43, 42, it's still a business that won't be wiped out by the little volatility and the macro uncertainties in the next few weeks. So we try to position and focus ourselves into such businesses, even as we look at the long term. So for us, yes, I think it's a good time to strategically start repositioning your portfolio and just look beyond the little volatility that you'll have in the next few weeks. But position for the long term, it's a good time to buy.
Monica, back to you now. In terms of minimum investments in most of these products, what should I maybe assemble so that I can be able to start investing with you?
We've tried to cater for all investors. So our money market fund is the entry fund where our minimum investment is 3,000 and a minimum top up of 1,000 at whatever frequency. The other funds, our Kenya shilling funds minimum investment is 100,000. So this is the Almasi, the Ngao, and the Thamani, and also the Mabruk, which is the Sharia. Minimum investment is 100,000. Minimum top up is 100,000. For our Africa Equity Fund, which is ZAR denominated, minimum initial investment is 15,000 rands. Converting this to Kenya shilling using the exchange rate of the day, which is approximately 6.9, that gives you around 103. And a minimum top up of 10,000 rands. For the dollar denominated funds, that's the global equities, Eurofix, and multi-asset strategy, and also Sharia global equities fund, a minimum of $1,000 and a minimum top up of $1,000.
And how do they get started in basic form? Like they have the money. What do they do next?
There are many ways of starting, but the simplest and the fastest is through our app. You can be able to open an account from an app. Our app is called Arvocap. You can download it from Play Store or App Store. You can also open an account through the portal. It's invest.avocap.com or directly from our website. You just click invest now. It will take you straight to the portal. You're able to create your own account, upload your KYC. If it's an individual, we only need 3 key documents that you will upload. That's a copy of your ID, national ID, both sides, a copy of your KRA PIN, and a photo, a passport photo, a selfie, a very clear photo of your face. That said, you can be able now to invest directly, even through M-Pesa STK push or direct transfer from your bank to our account. When you deposit your amount, you then come back to the app and invest so that you're able to choose your fund of choice.
There's a question here that has come through. I'll direct it at Wilson. Do you use hedging strategies like options, forex plays, sector rotations when you're trying to mitigate tariff-related risks?
Yes, within a multi-asset strategy fund, we use different strategies. As I said, to us, the market direction, we are agnostic to any market direction. Basically, we have studied the market directions better. We're looking at the market positioning. So we do quite a bit of study on that. Then based on that, now we apply different strategies. At times, you find that you have a position in certain counters or certain sectors, and based on what the market is expecting, and also in terms of the entries that you are looking at. So you look at the risk exposure that you have, that if the market was to move from this to this is my risk exposure. So you're looking at different hedging strategies to hedge that risk. It's not basically like you're hedging the whole portfolio falling, but the expected risk that you know that you're holding of that particular one. And so at times we may use some delivery options, some features or some options to hedge that. Our multi-asset strategy uses hedging tools. As I said, also the money equities fund uses the futures in the Nairobi Securities Exchange to hedge. Some funds have hedging tools. Some funds as a strategy don't have the hedging tools, but we do use them.
We are almost at the top of the hour, so I'll give you, Monica, this chance now to pitch to investors on why they should come to you. This is your chance now to talk to the investors directly and welcome them to your fund. And by the way, you're pretty young in the market as a fund, so I think that would be also a good place to tell the investors what you're offering differently.
Thank you for giving me this chance. Let me start by saying that the fact that we are young, so I would call it in quotes, is relative, because as we have introduced ourselves, it's not the first time we are getting into the investment space. We have enough experience in the market. The vehicle could be new, but the drivers are not new. That said, again, the regulation that we have given you, that we have gone through, and also by just doing your due diligence, using the CMA website, checking their licensees under the fund managers option, you will find us there. Again, checking the CIS regulated by Capital Markets Authority, you will find the Arvocap CIS there. So all the funds that we have pitched today are all regulated by capital markets. So I think that should give you some comfort. Nevertheless, feel free to even visit us to our offices, to give us a call, and also to do further due diligence. Beyond that, I think it's time we started thinking about wealth creation in a smart way. And that's why we really use this slogan, smart investing. Time is gone where we could only invest in property, buying land, or buying money markets and just parking money there and sitting back. There are new ways of making money and investing smartly. So as an investor, it's time to be open to these options. We are offering them time to shift your capital from just money markets, because as Wilson has said, money markets are short-term investments. How do you plan for your long-term goals? The other thing that I would want to urge our investors is think about your goals, those long-term goals that you're looking to achieve. Even a goal as simple as creation of wealth, so that you can be able to transition this wealth from this generation to the next generation and to the next. What is a better way that still preserves the value of that wealth? Unlike other types of assets that when you divide them, they reduce in value, this kind of investing still upholds the value of your investment. We are, again, easy to invest with. We are transparent. I will say that. We will give you the information you need. Our app actually gives you valuation reports as and when you want to pull them. You're also able to see how your investment is growing. There's nothing hidden. And the charges, again, are also listed even on our website. I want to request investors to do further due diligence, but basically we have given you the details about our investments, and take a bold move and be able to capture the opportunities that the market is offering and our expertise to manage your funds. Thank you.
Thank you so much, Monica. Wilson, there are some quick fire questions here I want to shoot to you. They're more about investment areas. So blockchain, is it an asset class that you're invested in? That is something someone was asking more about. Crypto. Can someone reinvest, do infrastructure bond reinvestment in the app? Or should they engage with the CBK directly? And what themes can local investors at the NSE observe? So those are quick ones for Wilson.
In terms of blockchain, I think there are so many ways of trading this blockchain theme beyond the crypto itself, beyond the volatility that's in the crypto market itself. So for us, as I said, we try to look at a theme, then look at if we expose ourselves into the main, there are those market leaders that will always be there. At times they tend to be a bit volatile. And then there are all these other auxiliary beneficiaries of this main theme. So they tend to do well and they tend to be a bit more resilient. So for us, at times we tend to stick to those and avoid a bit of the volatility within some of the leaders, especially in some of these spaces. And the other question was of the themes on the NSE. As I said, the NSE tends to be a bit theme, from your finance stocks, your banking stocks, to your dividend stocks. When you speak about value play, there's been a bit of disconnect between earnings growth for the last 7-8 years in the NSE. And even looking at the last 5 years, most of these companies have probably doubled, maybe even looking at the banking sector. But the market activity in the NSE has probably been a bit depressed. And so that one has hindered investors from realizing the true value of their investments. We are trading, even looking from a multiples perspective. You're trading some of these counters at less than one of their book value. You're trading book values of 0.5, 0.6 times. So I think that one has, in a way, And that's why we are trying to look at through some of these active strategies that can we try to bring more liquidity in the marketplace itself, that investors can still make money in the NSE during that period of volatility. And the hope is that now it's more investors streaming in, to have probably more equity funds being active in the market to help capture some of these trades or some of these returns. And with that, probably we see now realization of the NSE trying to move to its true value. There's a second question on infrastructure boards. So for infrastructure board, once you earn your coupons or once you earn your redemptions, I know now the 2009, there's a redemption on that this month. So once you earn your 50% redemption on that particular board, what you have seen is that investors are facing an investment risk. So where do you reinvest again? And do you get the same high returns that you were getting before? And for us now, that's why you're offering you an alternative through the Almasi Board Fund. That the coupon you get or that redemption that you get, you can still be invested in the same asset class, that's the bonds market, but through an active strategy. So here what changes is a strategy. It's an active strategy that's looking to actively be in the market, buying and selling of these bonds to offer you a decent returns. That is through the Almasi Fund. So that's what we as Arvocap are offering. That's different strategy to within the same asset class, but through this active management, through the same low level of risk, you can get above market return, like the 22% that we just declared for the month of March for the last 10 months.
Monica, there's a question here that has come through from a couple of investors. They're asking about fees and the charges. And then also you can mention the name of the app and the website again so that they can get that. And then you can give us your closing thoughts.
Thank you. Our app is called Arvocap. You can download it straight from Play Store or App Store. Our website is www.arvocap.com, and that's where you will find the portal. The portal is invest.arvocap.com. Fees. Different funds have different fees. So maybe I can just give a sum up of the fees. Our money market fund has 2% as a management fees. Our other funds do have an initial fee of 0.5%. On top of that, the fixed income funds, that's the Almasi, the Ngao, and the Eurofix, do have a performance fee above a hurdle rate. So for Almasi, the hurdle rate is the 5-year bond plus 200 bips, or 2%, we may call it. So if by the end of the year, the fund performed 26%, for example, and the 5-year bond was at 14%, so plus 2% is 16%. So that means the performance fee will be 26% minus 16%, 20% of that 10. That leaves the investor with 80% of anything above the hurdle rate. So in this case, the client will take home 24%. And that's the same case with the Eurofix, which has a hurdle rate of 10%. When it comes to the other funds, that's the equity funds and the multi-asset strategy funds, the fees are 2% management fees, 0.5 initial fees, and 20% performance fees. So this means on the day that we will register, remember the rates that you see us putting out there are already net of management fees. So the 2% have already been factored in. So it's only that performance we will charge 20%. My closing thoughts: change is constant, as CIO wrote a note on that earlier. How do you position yourself to this change as an investor? How do you ensure that you're optimizing your portfolio? You are diversifying it. We are giving you tools to diversify your portfolio, and diversification across different asset classes, different currencies, different region. And so this is an opportunity for you to grab and ensure that you optimize your returns. Thank you.
Thank you so much, Monica. Wilson, you can give us your closing thoughts also.
So one, we really appreciate everyone who has been listening to us and having that interest about Arvocap and its products. And for us, we're here to redefine wealth. That's our tagline. And what do we mean by redefining wealth? So it's basically helping you, as CEO has said, to optimize on your investments. Within this capital market space, help you optimize on your investments. And what we do, we create tools to make it easier for you as an investor. We have spoken about our app or the portal. It's a self-onboarding process. You can onboard yourself, you can monitor your investments, you can exit, sell, buy within the portal itself. But beyond that, we create other tools such as the wallets. When you're doing your money market, and you are saying that I'm investing into a holiday trip, I'm investing into saving for school fees, I'm saving for an emergency fund, I'm buying a new phone, I'm buying a new car. So we created wallets, and you can create as many wallets as possible. So basically goal-oriented in terms of investing. Then when you're doing simulations, you just want to know that if I was to start investing now, after this number of years, how will my, based on these few assumptions. So on our website itself, we have calculators. We have a GAO calculator to simulate how much would be, if you invest a certain lump sum, how much would you get monthly, quarterly, and such. We have a money market calculator. We have an Almasi calculator. So these are basically tools to help you simulate certain investment strategies. So for us, we are here to help make it easy and bring these tools to you as you're making these investment decisions. You're making them from an informed perspective to help you walk with you on the journey. Feel free to book a session with us, with our wealth manager, with our customer service team to just basically understand our investment products better, to understand our strategies better, and also to understand how can you start building your portfolio. And we're hoping to work with this journey with you. So karibuni sana. And once more, thank you very much. Thank you, Mongo Capital, for this opportunity. Asante sana.
Monica and Wilson, thank you so much for coming. I should say, on a positive note, there is one investor, after hearing about the app, has actually posted a screenshot of them downloading the Arvocap app. So our aim here on Spaces is almost always to bring you investment options. And I think Arvocap Asset Managers have given you a reason why you should invest with them. Do check them out in the various places where they've given. So from us at Mongo Capital, to the people in the audience, all of you joining us this evening, we don't take it for granted that you have joined us on the Spaces today to listen in on Investing 101 with Arvocap Asset Managers. We hope you make the best investment decision, which is not to start tomorrow, but to get started today in terms of investing for the long run. Unless there's something for Monica and Wilson, I think I'll end there. Monica, do you want to say something, Wilson?
No, thank you. Thank you so much for creating this opportunity for us to just be out here creating literacy. We keep saying adult education is not as simple as the CBC happening right now. We need to keep hearing and trying to shift our mindset from what we know and learning and relearning new things. So thank you so much for giving us this opportunity. We look forward to interacting with clients. Welcome on board. We are ready to help you on your investment journey. Thank you so much.